Okay, let's unpack this. Today, we're diving deep, really getting a look behind the curtain at market dynamics.
Mm,
Specifically, how these anticipated interest rate cuts might be, setting the stage for some pretty significant opportunities in consumer discretionary
right.
ETFs.
Exchange traded funds.
Exactly. And our guide for this is a really detailed report from VYRA's AUREA. It doesn't just throw data at us, it helps us understand the market's underlying rhythms, its heartbeat almost.
Yeah, what's fascinating here, I think, is the core idea. These consumer discretionary ETFs, and we're focusing on XLY, VCR, and PSCD, particularly, they're highly responsive to interest rate cycles
Okay.
and, of course, to the broader trend of consumption recovery. But AUREA's rhythm analysis, their framework, it doesn't just say this. It really tries to pinpoint why these rhythms are so important.
Right.
It often flags these structural shifts, maybe before the usual indicators catch on. It's like hearing the music before everyone else starts dancing, sort of.
That's a really interesting way to put it. And what's also key is how different these ETFs are, right? They offer distinct ways to play that rhythm.
Exactly.
Like XLY is just packed with mega caps. Amazon and Tesla alone are, what, over 40%?
Yeah, combined. Huge weighting.
Which gives it this stable, almost kind of predictable upside momentum. Then there's VCR that's more balanced.
Right, in a mix. You get mid-sized growth stocks in there, along with some of the mega caps.
Yeah.
So more diversified returns, potentially.
Okay. And the third one, PSCD,
Oh,
smaller cap.
That's the one, smaller cap ETF. So, yeah, higher volatility, definitely. But that also means it has the potential for a much more elastic rally when the economy really picks up. More snapback potential.
Gotcha. So we have these different profiles. How does AUREA's rhythm idea help us figure out where they're heading right now, especially with rate cuts potentially on the horizon?
Well, that's where the RHATH mix analysis comes in. Our proprietary framework, it maps these cycles and momentum shifts. And right now, it's indicating a bit of a short-term downward adjustment for the sector.
Okay, so near-term caution.
A little bit, yeah. But, and this is key, our rhythm signals are already highlighting structural opportunities in the medium-term recovery. It's basically urging investors to look past the immediate sort of choppy water.
So seeing the underlying current, not just the surface waves.
Precisely. That's the goal.
Okay, so given that picture short-term bumps, medium-term promise, the report then gets into actionable strategies. That's always the crucial part. What specific plays is AUREA suggesting?
Right. So for XLY, with that expected short-term volatility, the idea is phased buying. You don't jump in all at once, and you keep a really close eye out for what AUREA calls a Trap 23 resolution. That's a specific technical signal in our framework that suggests a strong point to re-enter or accumulate.
Okay, a trigger point. And VCR?
For VCR, it's more about looking for swing trades, especially near resistance levels. And again, confirming a short-term tier rate resolution before buying on a potential breakout.
Makes sense. More tactical.
A bit more tactical, yes. And then with PSCD, particularly if you're thinking midterm, the advice is to watch for support developing around the 2900s level.
Right.
The expectation there is that it could get significant leverage from both those potential rate cuts and the broader consumption recovery that should follow.
Yeah, and these strategies feel pretty timely when you look outside the report too, don't they? I mean, FedWatch data has, what, a 70% probability priced in for 2 rate cuts this year. That's high.
Very high expectation, yeah.
And we're seeing decent consumption signs already. Retail sales improved, up 0.7% month over month recently, which was better than expected.
That was a positive signal.
And it's not just the pros talking about this. You see chatter on places like Reddit's StockTwits too. People are definitely buzzing about these ETFs and this whole rate cut ETF play.
Absolutely. That kind of broad awareness often builds before bigger market moves. It's something to note. Now, of course, you always have to talk risks. With any opportunity, there are risks. We mentioned the short-term volatility across the board. And for PSCD specifically, because it's smaller, liquidity can sometimes be a concern. You need to be aware of that. It might be harder to get in and out quickly in size.
Good point. Okay, so let's try and tie this all together for everyone listening. The main takeaway seems to be, yes, expect some short-term noise, some volatility. But these consumer discretionary ETFs, XLY, VCR, PSCD, they look really well positioned to be right at the center of a mid to long-term rally.
Yeah, driven by that combination of consumption recovery and mega cap growth, all happening hopefully within an environment where interest rates are coming down.
Right.
And if we zoom out just a bit, it really highlights AUREA's whole philosophy, which is ETF investing isn't just picking stocks. It's using ETFs as a tool to read the market rhythm.
Ah, interesting.
This cycle, this potential turning point with rates, it's a real opportunity for investors who can, actually decipher those rhythms, who can see past the day-to-day static to the underlying shifts.
Okay, so a final thought then, maybe something for you, our listener, to chew on. How might adopting this kind of market rhythm perspective, really trying to understand these deeper cycles instead of just reacting to the daily headlines, how might that fundamentally change your approach, not just for ETFs, but maybe across your whole investment strategy? Something to think about.